Ladies and gentlemen, good day and welcome to the Q3 FY23 results conference call of Patel Engineering Limited, hosted by Kiran Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vastupal Shah from Kiran Advisors Private Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. Thanks for joining the conference call of Patel Engineering Limited. I would like to welcome Ms. Kavita Shirvaikar, Whole-Time Director and CFO of the company, Mr. Rahul Agarwal, Head Strategy and Finance, Mr. Aditya Bajaj, Investor Relations and Marketing. Ms. Kavita, over to you, ma'am.
Yeah, thank you, Vastupal. Good evening, ladies and gentlemen. A very warm welcome to all of you for attending this Q3 FY23 earnings call of Patel Engineering Limited. We have uploaded the investor presentation on the stock exchange, and I hope you all would have got a chance to look at the numbers. Without getting into all details of the presentation, let me brief you on the key highlights of Q3 FY23, post which we can take your questions. Let me take you all through the key financial numbers of the quarter and 9-month period. On a consolidated basis, revenue from operations for Q3 FY23 is at rupees 10,369.77 million, which is up by 18.11% from rupees 8,779.43 million in the corresponding quarter in the previous year. Revenue from operations for 9-month FY23 is at rupees 29039.37 million, which is up by 28% from rupees 22686.43 million in 9-month FY22. On a standalone basis, revenue from operations for Q3 FY23 is at rupees 9293.89 million, up 20.17% from rupees 7734.16 million in Q3 FY22. Revenue from operations for 9-month FY23 is at rupees 26249.43, up 31.2% from rupees 19998.06 million in 9-month FY22. Operating EBITDA on a consolidated basis for Q3 FY23 is at rupees 1637.48 million, a margin of 15.79%, and net profit at rupees 194.83 million. Our 9-month net profit has more than doubled to rupees 704.4 million as compared to rupees 335.62 million as corresponding period in previous year. On a standalone basis, operating EBITDA for Q3 FY23 is at rupees 1307.12 million, a margin of 14.06%, and net profit at rupees 213.97 million, up by 32.2% as compared to a profit of rupees 161.74 million in the Q3 FY22. And 9-month profit is up 178% at rupees 717.70 million from 257.98 million. The revenue for the quarter is higher as compared to previous year, given the increase in order inflow in the last 2 years. The sector-wise revenue breakup. Let me give you the sector-wise revenue breakup. Revenue from hydro is 52%, tunnel sector is 21%, irrigation sector is 13%, from road and other sector is 14%. Now coming to order book of the company. Our order book as on 31st December 2022 is 168094 million, which is 16,809 crores. Coming to the composition, 66.47% is coming from hydro sector, 14.11% from irrigation sector, 12.56% tunneling sector, and rest is 7%. Out of this, 75% of our order book is from the central PSU, which is AA, AAA rated and have a healthy balance sheet. It's current 9 months, we have received order book of 36085 million. Revenue for these new projects and corresponding profitability shall commence in Q4 and next year revenues. So going forward, you will see there will be a improvement in margins. So given the focus on infrastructure, we expect a huge pipeline of work going forward. We expect our order book to cross 2 lakh million in the coming quarters. As you are aware, our order book mainly 66% comprises from hydro sector. We have a very positive outlook in the sector. Speaking about hydropower. Hydropower generation is highly capital intensive mode of electricity generation, renewable source of energy with no consumables involved. Very little recurring cost, hence no high long-term expenditure. Hydropower supplies at least 50% of electricity production in 66 countries and at least 90% in 24 countries. With a large swath of rivers and water bodies, India has enormous potential for hydropower generation. Around 26% of hydropower potential has been exploited in India. So there is a huge opportunity available. Now, as regards budget for the infrastructure sector, increase in the proposed expenditure for infrastructure to rupees 10 lakh crore for FY24. Out of the same, railways will receive a capital outlay of 2.4 lakh crore, the highest allocation ever since 2013-14. Investments totaling rupees 75,000 crore will be made in 100 vital transportation infrastructure projects. The creation of the new infrastructure finance secretariat will increase opportunities for private infrastructure investment. See, due to strong pedigree, Patel Engineering Limited is well poised to take advantage of this growing industry. Now, I would like to mention some key highlights or execution key highlights of this quarter. The company was awarded with the Top Challenger 2022 company at the 28th Construction World Global Awards 2022. Our Chairman and Managing Director, Mr. Rupen Patel, was featured in the CEO magazine sharing his views on transforming India's infrastructure. At our AMD2 project site located in Mumbai, Maharashtra, we completed entire tunnel of 5.5 km by customized TBM ahead of schedule. One of the project in Jammu, T2 tunnel, substantially completed in the last quarter, which is also we completed ahead of schedule. The company has filed its letter of offer for a right issue to raise rupees 3250 million, which will help the company to reduce the borrowing and meet its working capital requirements. The promoters have already infused their share of rupees 1,300 million in the company. The net debt of the company on a consolidated basis is rupees 19,718.08 million. The same is expected to further come down with the help of right issue and monetization of non-core assets. Q3 FY23 has been overall good for the company and in line with our expectations. The Indian economy is exhibiting promising signals with lending institutions' balance sheet getting stronger, robust tax collection, growth in GDP, and decline in inflation rates. With sturdy investment intentions, various new projects are expected to be introduced by the government in infrastructure space, and trend is likely to continue. We expect continued growth in terms of revenue and profitability going forward. Surplus generated from projects and from monetization of non-core assets shall be utilized to reduce the debt and improve the profitability further and unlock shareholder value. That was a small brief from our side, and now I will like Parsipal to take over, and our team here shall be happy to answer any further questions which you all may have. Thank you very much.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is on the line of Rishabh Shah from RS Capital. Please go ahead.
Hello.
Hi, Mr. Yusuf. How are you?
Yeah, I'm fine. How are you?
Good.
Yeah, I just want to clarify. Again, we have seen some sort of selling from the promoter entity in the December quarter as per disclosures. And now again we are, raising funds for right issue. So, I'm trying to understand, will promoters be participating in this? What is the...
Yeah, promoters are participating.
Okay. And how much more capital raise do you think you require apart from this 300 crore you are raising now? For growth or whatever, how much further capital you require after this?
So 325 crores rights issue which we have proposed is based on whatever order book we have received and we expect to receive in next year or so. Going forward, when we get more orders, then we'll decide capital requirement.
But going forward, will the promoter be selling more shares or what? Because there has been some incessant selling, last 6 months. Around 140 crores of, approximately a value has been sold by the promoter entity. So, that is not giving some sort of confidence,
So, Mr. Bishop, promoter has sold shares and put money in the company itself, which for the working capital requirements of the company. And that 130 crores which they have put is, going to get converted into equity shares under the right issue under their share allotment. So,
at what price will that be converted?
The right issue price, no? It's done at right
issue price.
Yeah.
So, I'm just clarifying. Does the promoter need to sell further stake to bring more capital, or that is the end? I just want some clarification on that.
No. So I'll tell you. The promoter sold shares because the company requested promoters to put in money in the company. We didn't want to borrow it from lenders and incur more interest costs. So promoters sold some shares and put in the money, and then now in right issue, all shareholders are getting the right to subscribe. They would have also got, and now what they have already put in the money, so that their portion will be converted.
Okay. And is there any update on the land bank sale, the Chennai or anywhere else, or any other non-core asset that we have? Any update? Any significant development?
So we are in discussions with various land sales. Some portions we have done also, and now we are looking to sell more land parcels, but that depends upon how the transaction goes forward.
So, but last 6 months, has there been a development? Because last 6 months we've been talking, so if there isn't significant development, maybe next 1 or 2 quarters anything can happen, or?
Yeah, so we have been discussion around 60 odd crores funds we have received from sale of land parcels.
So Rahul, we have already sold around 47 crore worth of around 50 crore value of land parcel and reduced the debt actually.
Right. That's what I'm saying. Already sold so much land parcel, and now we expect to go forward further as and when the transactions will happen.
Okay, that will be much higher than 50-60 crores. What you're saying?
Yeah.
Yeah, correct.
Okay. And there's some JV. There are some loss in the console. What is that exactly? In one of the JV, there is some loss that you booked, exception or something. Oh.
No, so I'll tell you. Exceptional items, we had sold one project, Raichur Sholapur Transmission Company, where we have 33.33% stake. So upon sale of that asset, whatever balance, because there was some foreign currency ECB loan out there, so although the transaction took 1 year to complete, so during that period, based on the agreed price mechanism, we had to incur a loss of around 6 odd crores. So that has been taken as exceptional item.
So going forward, further, all other associate or JV companies, any transaction are we expecting, or to get rid of or something, or?
Nothing as of now.
Okay, and just other expenses, we have seen an increase. If you just compare year on year and sequentially, so what is the reason for that?
Not any specific reason. The overall revenue size, everything is increasing. So we have to expand in terms of employee base, in terms of administrative overheads. So that is only there.
Okay. And just last question, the demand scenario, what is the outlook? Because since last, I think this Q3, Q4 are good for infra companies normally.
Right. So we had given an outlook of around 15% year on year in terms of revenue. I think we are in line with that.
Okay. Thank you.
Thank you.
Thank you. The next question is on the line of S. Lodha from Sanmati Consultants. Please go ahead.
Thank you, madam, for opportunity. Hello, am I audible?
Yes, sir.
Can you tell us, sir, what is the position of the order bid by the company which is pending, and how much company is L1 in the orders? How much orders company has further bid for this idle and infra?
Sir, so at any point of time, we keep on bidding and more than 10-20,000 works are always there in pipeline. So hopefully let's see what orders when we can receive.
Anything out of that orders bid? Anything in the L1 in any amount L1?
Sir, L1 we can't comment right now unless the LOA is received.
No, but there is L1. We expect to receive LOA shortly. Yeah.
No amount cannot be specified.
Sir, right now we cannot give the amounts because that we can give only after LOA is received.
Sir, whatever you are running, you are paying 100 crore rupees interest, and you are taking too long in the monetizing your fixed assets. You are talking since last 4 years to monetize the assets. Management is sleeping on the assets and are paying 100 crore rupees interest in a quarter. What is the sense, sir?
Sir, may I, sir, the last 3-5 years, they have paid 1,200 crore debt prepaid by monetizing. Initially, now another one more asset and one more claim monetization is in process. The current quarter, which is not last quarter, December, no. Last Q4, you will see some more monetization which is in pipeline and which will materialize, and you will see further debt coming down.
But interest liability has not come down. You are saying that it is already 100 crore rupees. Whatever you earn, you are paying in the interest. What you will give that to the shareholders?
Sir, our business is such that we need funds for working capital. So we need to take advances from clients, plus we have borrowings. So both combined, we have to pay interest, plus we also have to pay bank guarantee commissions for bank guarantees taken for projects. But if you see considerably, we have reduced debt, and that is what our focus is, to keep on reducing debt. And as and when revenues are increasing and the debt is reducing, our profitability will improve.
Sir, because of that, we are coming to the right issue, which will further help us reduce the debt. So
Madam, right issue has been cleverly planned. Why you are not bring the right issue at 28 rupees? Why you are bringing it 16 rupees?
It is based on the market, sir.
Not based on the market, it's based on the unethical means of the intention of the management.
But it is offered to all shareholders, right?
Yeah.
No, the question does not arise. First, you sold the share in the open market, 6 board share you sold in the open market. Then you lend that money from your private company to the company. Then same money is being utilized in the acquiring the share is 12 rupees. This is the story.
Sorry?
Don't you agree with me?
No, sir, we don't agree with you.
Okay, thank you. That's all.
Thank you. The next question is from the line of Yaswanti Kedkar, an individual investor. Please go ahead.
Yeah, I just wanted to continue with the debt part of this company. What is the current cost of the debt which you are paying?
Cost of debt is around 11.5%.
Are you talking about in financial institution to have the reduced rate, or we are negotiating on a rate?
So we are constantly working with rating agencies to improve our rating. Our rating was at the start of the year was around BBB minus, and now we are at BBB stable. After March results, we expect to go for re-review, and then hopefully our ratings will improve further. So if you see in the market, the interest rates have been increasing, but because our rating has been improving, our interest rates have not gone up.
Okay, and can we expect further reduces?
Yeah, post March results, when our rating is reviewed, then we'll touch base again with the lender.
Okay. So coming down to the financial performance, we have seen there's almost 100 basis point, decrease in the operating margin. which is around from 16 and odd percent to 15 and odd percent. So is it because of any change in the project mix, or it is due to purely because of the cost? Because I see there is a cost improvement, cost increase in the employee cost also. So how it is?
So I'll explain you. It is twofold. One is, if you see, we always say that our margins will range between 14 to 15%. It's only quarter-on-quarter basis is not exactly comparable, because in which quarter what kind of portion of work is executed, based on that it will determine. Plus, this year we have got a lot of new orders. So for the new orders in the initial mobilization phase, there is no profit booked, maybe up to 8-10% of the work executed. So unless now Q4 onwards, maybe that threshold will cross and, the profitability booking will start.
Okay. So what kind of a guidance or what kind of a margin you foresee even for closing for FY23 and going forward, because we are getting any contracts, good margin projects coming in our portfolio?
So we expect our margins to be between 14 to 15%.
Okay, and that is sustainable.
Yeah.
So, and out of this right issue of around 325 crores, what portion you are planning to repay as a debt?
So I'll tell you, the mix is such that out of the total right issue size, around 25% is kept for general corporate purpose, and the rest amount is for, payment of debt, interest, everything.
Okay. Okay. Then, the budget has been positive with the 10,000 crore of, capital outlay for the whole infrastructure. But as we are basically into the hydroelectric and tunneling, any specific positive can we see from the budget perspective going forward?
So I'll tell you, the budget says 10 lakh crores of capex expenditure for infrastructure. Obviously, a large share will have to go for renewable energy. Hydropower being a large renewable energy sector, so we expect a lot of works coming in hydropower, and we get a lot of works. Apart from hydropower, we also have other sectors where we are working, other waterworks, irrigation, roads, railways. So we expect a good chunk of orders coming in from all these sectors as well.
Okay. Thank you for your all information and all the best for the future. We expect this date, which is major concern, to come down going forward. Thank you so much.
Thank you.
Thank you. The next question is from the line of Rahul Shah from Strategic Partners. Please go ahead.
Hello, hi. Congratulations on the good set of numbers. I would like to ask you on the margin front. With the increase in the order book, I guess order book is at the peak, and how we are expecting net profit margin to pan out in coming years. I see there's a huge growth in margin in current quarter. So can you put some light on that?
So see, our main cost, our EBITDA margin is around 14-15%. So as and when the revenues will grow, the EBITDA in absolute terms will grow. Now the interest cost, because we are taking so much measures to not increase the debt, so we are trying to manage the interest cost at current levels or reduce it from there. So that delta will always be there and the profitability will improve.
Okay, sir. That's it. I guess other questions have been asked already. Thank you for the result and all the best.
Thank you.
Thank you. The next question is on the line of Raj from Arja Partners. Please go ahead.
How your FY24 is going to look like regarding sales and PAT and everything?
So we expect around, we had given a guidance of 15% year-on-year growth for revenue, so we should maintain that.
15% sales growth? Okay.
Yes.
And also, when an earlier analyst, he alleged you about fraud and everything, so answer about that. So it gives a very wrong impression on the community,
So I'll tell you, we answered already that the promoters sold the shares and put the money in the company. Then that is, there is nothing wrong in that, because the company needed money. They sold the shares and put the money in the company. Now then we came out with a right issue which is open to all shareholders. Right issue, when we come out, it has to come out based on the market, what is there currently. And accordingly, and the price, whatever is offered in the rights, it is offered to all. So it's not that, promoter stake is going to go up or anything like that and promoter is trying to do. Anybody can blame anything, but that is not a fact. The fact is that promoter has not come out with a preferential allotment. It is very clear. The date when we, announced the rights, the pricing was around 17 rupees odd. So some considerable discount from there based on market past right issue sizes we have seen. Accordingly, we have gone ahead.
Okay. Thanks. Have a good day. Bye.
Thank you. The next question is on the line of Sanjeev Kumar Dabani from SKD Consulting. Please go ahead.
Good afternoon. Am I audible?
Yeah.
Yes. Thank you, sir. Sir, congratulations on very fine set of numbers. And I know that through the difficult periods, we are coming out of such a mess of situation. So I really appreciate the patience of the management and their efforts in taking out the company, selling it out from all the difficult times. So now coming to my question, I'll be very happy to, gauge the proper strength of the company if I can know an approximate amount of real estate or land, buildings and properties that company owns, which is having a reasonable market value as X today, which we can either realize or may not realize, but we hold these many assets which are company's assets not related to the current business of the company. Can I get any such approximate amount for my better understanding of the company?
Yeah, so in the last quarter conference call also, we said that we have land bank of approximately 1,000 crores value.
Okay.
So these land banks, these are non-core assets which we are slowly trying to monetize. Everything can't be monetized immediately.
I understand. Yes, sir. We understand this. Yes. Please continue, sir. Sorry.
Yeah, correct. So this is the assets which we have, which will help to monetize apart from normal business.
Right.
Plus whatever we can get from past claims and arbitration awards, because we have done a lot of projects of the government in the past and we have arbitration awards and claims. So whatever money gets released from that, all combined, we are trying to reduce debt as much as possible.
Agree, sir. So actually, I was coming to the second question also, that if this can be classified very clearly that the arbitration awards already received, then how much we have got against those awards, how much real cash has come into the company, how much amount as claimed by us is still under arbitration or dispute. So if all these things can be very clearly classified, one can understand the inner strength of the company much better. And my last question is about the same first question, that only 1,000 worth of land parcel we have got, or we have got many other assets which can be which are not part of the operations of the business. Like, various sites are there where we are working, but suppose we have offices, we have godowns, we have, some clear land meant for real estate development. So the sum total will come to only 1,000, or will it go up? Now I expect your reply, sir. Thank you.
Sir, so I'm talking to you about major land parcels which we have. Now if you're talking about site offices and all that sort of working we have not done. So obviously each site will have a site office, some portion of land, some quarries, all those land parcels will be there. Some are rented out. So, it is that and other.
No, Rahul. No, sir, over and above that land parcel, we have another claim like arbitration award and work. There also we expect going forward around 1,000 crore realization. So 1,000 crore from claim and 1,000 crore from land sale.
Okay. So can I take it this way, that awards already given in our favor are 1,000 crore worth, or they are much more, and our rest of the matter which are still disputed, you know.
I'll tell you, sir, around 700, 800 is award is in our favor, and around 1,000 crore which is claim under pipeline.
Okay, that's the total thing that we have made a claim of, and what maximum we can realize is 1,800 crores in due course of time. Because
So
I understand
800, 2,000 crore from claim and 1,000 crore from land parcels, yes.
then this much what we can realize in due course of time. And you
Right.
hinted just now that in this quarter only you are trying to realize something. So will that be around
100 crore we expect to
Acha.
realize in this quarter only, sir.
Acha, only 100 crores might come out of all that, right?
100
Got
plus
it.
land sale around 60, 70, so around 200 crore we expect in this quarter, sir. 150 to 200 crore in this quarter, sir.
Very nice. Thank you very much, and all the best for future of our company. Thank you, sir.
Thank you, sir. Thank you. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of C.K. Bhartiya, an individual investor. Please go ahead.
Hello, am I audible? Hello, am I audible?
Yes, sir, you're audible.
Yeah, my question is regarding right issue. Out of 325 crores, what I understand, 130 crores has already been infused by the promoter. Is it correct?
Correct.
It means only 195 crores is to be received in this right issue.
So I'll tell you, 325 is the size. Promoter is holding around 40%. So their share comes to around 130 crores. That they have already infused. Balance we are expecting to receive from other shareholders.
Yeah, 195, about say 200 crore rupees. And now you have just said that 25% will be used for corporate purpose and 75% will be used for the repayment of interest and loan.
Correct.
So can I assume that out of the right issued proceeds of net 200 crore rupees, entire amount will be repaid towards debt?
No, say 130 crores promoter fund which is received is already received as debt, no? So that will be repaid from this balance amount. Total issue size 25% is general corporate purpose, and rest will be used for repayment of debt and interest. The general corporate purpose also will help in way of reduction of debt, because then we don't need to avail working capital facilities to that extent.
The net to net cash inflow to the company will be 200 crore rupees.
Correct.
Because 130 you have already received.
Right.
Okay, now tell me the next question. Considering the price difference between the present price and your right price is about 3-4 rupees only. In case public does not take their part, will the promoters are ready to take up more share?
We don't know, sir. We'll have to check with them. Right now we have got commitment up to this 130 crores.
Have you got any commitment from the promoters in case right issue is not taken up by the public? Will they be subscribing, or there is no commitment from the promoters?
Given commitment up to their share of the issue.
Okay. In case public does not take, in that case you will let that be unsubscribed, isn't it?
So with the positivity in the current infrastructure sector and our company performance, we are positive to achieve.
Madam, you are already, this is there, but we have seen your prices coming down from 28, 29 level to 15. Even this environment, when there is a positivity in infrastructure and your performance continues to be good, but prices are falling because of the promoter selling the share, isn't it? So I believe that because in these circumstances there is a possibility that public may not take up this share. That is what I was wondering. Another question, let it be, if you want to. Another question that I have seen in the consolidated performance, your margins in this business has come down from 40 crores to 30 crores in this quarter. What is the reason? Consolidated, if you see, because most of the EBITDA is from the real estate. And if you see that if you see the segmental, your civil construction is from down by 51 crores to 30 crores.
So you can't compare quarter on quarter. If you see last year comparable, this quarter was around 31 crores only. So we are in line with that.
But your prices, this top line has also gone up from 8,500 to 10,000, from 853 to 1,019.
Correct.
Your margins are down.
So margins are, that's what I'm saying. So our current margins is around 1-2% down from that quarter. But on an overall basis, we maintain 14-15%. And it depends upon what portion of work is getting executed in this current quarter.
It all depends on the mix we execute during the quarter.
Okay. Thank you, madam. That is from my side. Thank you very much.
Thank you.
Thank you. The next question is from the line of Varun Mehta from Wealth Link Investments. Please go ahead.
Hi, sir. I just wanted to understand that you said there's the cost of borrowing is 11% for us.
Correct.
And total debt is 2,000 crores, 1,900 something you just mentioned.
Right.
So why we are paying 100 crores a quarter, which makes it 400 crores for a year?
So we have, I'll tell you, we have the finance cost consists of three main components. One is the interest which is payable on to the lenders, which is around 11.5% on this 2,000 odd crores. Then we have advances from clients for projects. So on the advances also we have to pay interest. So we have advances of approximately 1,100 crores. On that also we have to pay interest. Some are interest free, some are at a lower interest cost. But still there is an interest cost of around 9-10% on that. And apart from that, we have to give performance BGs, advance BGs. So we have to pay BG commission, BG LC commissions on the non-fund based component. So that is also around 60 to 80 crores per annum. So all combined, you will see a 400 crores interest of finance cost.
Understand. And how much is our accumulated losses so that we like for income tax and total losses what we have in our books?
Accumulated losses?
Yeah.
No, we don't have accumulated losses as such because we have been earning profits every year.
Okay. Understood. Thank you. That's it.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Sandeep Mani from FM Research. Please go ahead.
Hi. Hello. Good afternoon. Good afternoon. Hello, may I audible?
Yeah, you're audible, sir.
Yes, sir. Sir, my first question is, can you tell me what are your future plans for business growth?
So future plans for business growth, there are a lot of projects in pipeline, and we expect the order book to go up. And so currently we are around 16,800 crores, and to go up to post execution around 20,000 crores in coming quarters. So then from there, so we expect at least 14-15% growth top line basis.
Yes. Sir, can you tell me which sector will be the focus area?
So we are focusing on all segments, but our majority order book comes from the hydropower and underground tunneling. So hydropower, underground tunneling, railways, waterworks, these are the sectors which we are focusing on.
Yes. Sir, your total order books stood at 168,094 million, right?
Right.
Sir, can you tell me sector-wise contribution for the same?
Yeah, so around 66% is hydro, around 14% is irrigation, 12.5% is tunneling, underground tunneling, and rest is roads, urban infrastructure, others.
It's roads and other?
Roads, urban infrastructure. Roads, urban infrastructure, yeah.
Yeah. How many but?
Sorry?
How many contributions, road and others?
5-6% balance, whatever is there.
Okay. Yeah. Sir, in hydro sector and tunneling.
Sir, your audio clear.
Hello?
Yes, sir. Can you use the handset mode while speaking? Your audio is not clear.
Yeah, now? May I audible?
Yes.
Yes. In hydro sector and tunneling, what is the opportunity size in India?
So I'll tell you, in hydro segment, the opportunity size, there's a huge potential around, you can say more than 50,000 odd crores of work is expected to come in hydro segment itself. Now, railways have been allocated 2 lakh crore this year, 2.4 lakh crore. So railways, if you see our railway line in India, a lot of scope is there to expand in the northeast and J&K, where they have to construct through making tunnels. We are already making 2-3 tunnels for railways and border road organization in Arunachal and J&K. So there is a lot of scope coming up, sir.
Okay. Planning work in railways?
Sorry?
Are you planning work in railways?
Railways means we do work for railways, but mostly for tunneling works.
My last question is, what about the debt reduction? Any progress on that?
So we are focusing on reduction of debt. We are looking for sale of certain non-core assets, realization of certain arbitration awards, as Kavita ma'am was saying some time back.
Yeah,
we will be using these funds to reduce the debt. Plus, via rights issue also some funds are expected, so that will also help in reduction of debt.
Okay. Sir, in this quarter, can we have received any fresh orders right now?
This quarter, nothing yet.
Okay, sir. Thank you.
Thank you.
Thank you. Our participants, anyone wishing to ask a question, may please press star and 1. As there are no further questions, I now hand the conference over to Mr. Vastupal Shah for his closing comments.
Thank you everyone for joining the conference call of Patel Engineering Limited. If you have any queries, you can write us at info@kirinadvisors.com. Once more, many thanks to management team and participants for joining the conference call.
Thank you.
Thank you all. Thank you.
Thank you, everyone.
Thank you.
Thank you.
Ladies and gentlemen, on behalf of Kirin Advisors Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your line.